Okay, cool. So, for the most part, I want to address the issue, which is pretty much everyone's been facing, where you have a great week of trading, you make a lot of money, and then pretty much all of a sudden, one move down, you give it all back. And it's usually the result of a phenomenon we've talked about all month, and probably all the time we've been in this Discord, which is pretty much letting the losers run too long and then closing the winners right away. But there's actually a bit more to it than that, I think. And for most people, at least myself especially, I've been finding I've been struggling it too, especially in this market where it's been so choppy on the way up, and the moves down are quite swift, and there's really just no exits, and you take a massive loss. My suggestion would be to do this. This is the first thing I would say is if you're finding this uh, phenomenon where you're basically reading the markets, successfully most of the time, you're confident in your analysis, but you're just losing money over time. What I would do is stop keeping a trading account. Seriously, empty the money out of the trading account. Just get rid of all of it. And I would just pick a number based on your net worth or whatever you have in crypto that you're comfortable trading. So for me, I risk around $1,000 per trade. And I do this true. I do this myself as well, by the way. I don't keep a trading account. That's why I usually have the money in Jupe, just for context. Is what I'll usually do is I'll have a number in my head where I know I'm going to risk $1,000 if I see a good trade. And then instead of trying to force a trade or force my account to compound every day, I'll leave the money on the side and just wait for an opportunity where I go, oh, I want to take this trade. And let's say I take the trade, I make $2,000. I'm just going to withdraw that entire balance back to my main account. And maybe I'll go invest in spot. Maybe I'll go put it in my bank account. I don't know. The difference is I'm not going to put it back in a trading account where I'm going to start betting more and more. And I think a lot of you guys have this problem where it's one of two things. Either you load up a really small amount of money into a Blowfin account, let's say $200, which is fine, but you start trading like $40 a trade. You're better off just putting $1,000 in and then risking the same $40. I think people think just because they add more money, they're going to necessarily lose it all. That isn't how it works. At the end of the day, you guys can set the risk. And what I always try to tell people is that you're better off to use less risk with more capital. Why? It's not just about the percents and risk per trade and keeping your risk managed. It's because when you're using such a small amount of capital, the amount of position size that you can take is dropping exponentially. So let's say you take the $200 account and now you've lost $100. You can only open half, the same size of a trade as you did last time. So to make that $100 back is going to be at least twice as hard, and you're going to lose the money at least twice as fast. So in cases like this, my suggestion would be, why even keep the account? Just understand, if I want to take a trade, I'm going to risk $50. Deposit $250 in the Blowfin when you want to make that trade, and then just put the $50 risk. You're far better off doing this and then not trying to compound it. Because at least with this, guys, you're never going to wash out all your progress in one day. Let me explain. A lot of you guys have this phenomenon where you tend to run up really well, like you're going to go from $200 to like $700, but then you'll keep trading with that $700 balance and then eventually blow the $700 balance all in one trade, usually on a day like today. And it's not that you're trading bad or doing anything wrong. Technically, you're doing it all right. You won the first 5 trades, so you kept compounding your risk. You took the same risk every time, so why did you lose money at the end of it? It's because the risk was so high. When you're down 30% or down 40%, you're not going to take the loss. You're just going to let it run and then blow up the account all at once. Why does withdrawing solve the problem? If I deposit 5 times that I want to take, this 1K risk trade, when I eventually do blow up my account and lose the 1K, I'll still have made 4K the other 4 times. And there's no pool of money that I'm drawing on that I'm just going to go down over time. I'm just straight up saying, okay, I want to trade, I risk $1,000. If I do that more times than I lose, I make money over time. This eliminates the need to really think about your account as something that matters, because it doesn't. All you're thinking about with this strategy is, am I making more money than I'm losing over time? It's a lot easier way to think about it. And I think for most people as well, not increasing the amount you're trading as your balance grows is a huge game changer, because most of you guys aren't consistent enough where you're going to make any money doing that. You're going to have a nice 2-week streak, then a restart back to 0. And that's fine. I did that for years, if not more. I'm sure Nick can attest to that. He watched me trade for quite a while. And then eventually I just said, yeah, I'm just going to stop funding my accounts. I'm just going to try to make $1,000 a trade. And then eventually I was like, oh, I have 10K in spot. I could have a trading account now if I wanted to. Instead of turning $1,000 into $2,000, $2,000 into $4,000, and then trying to compound this over and over again, because eventually you will lose, and that's when you'll blow up the whole account all at once. This is the one very obvious way I would say to think about your trades. The other thing I would say that I think is more obvious that most people don't do already is you have to know where you're putting your stop loss before you enter the trade. I mean, this does sound like it's pretty self-explanatory, but you have to know exactly how much money you are going to lose whenever you're wrong before you enter a trade. If you don't know where you're going to put the stop loss, don't take the trade, because you're just basically saying whatever I lose, I lose. I have no idea what I'm going to lose, but I'm going to find out and be fine with it. That's basically what you're saying. That's what I did the other day when I longed at like 674 or whatever. And how did that work out for me? Pretty terrible, right? It doesn't work. We know it doesn't work. It's not exactly a secret. So at the end of the day, my advice is actually pretty straightforward, I would say. Number one, stop the compounding altogether. Stop. If it's not working, it's not working for a reason. I wouldn't even waste my time. I would really try to focus on just being right whenever you think is a good opportunity. You don't need to take a trade every single day. At the end of the day, you just don't need to. You're far better off taking way less trades in things that you're confident in. I always try to tell people, don't sit in things that you think are just a straight up 50-50. If something just feels like a full-on 50-50, you probably don't have a reason to be in the trade, because you could just wait and find a new one. And I say this about things that usually go back to break even. Fuck off, Ajisham. Stop making money. It's so ridiculous. I hate when he posts his winning P&L cards. Anyways, sorry, I got sidetracked there for a minute. Wow. If someone wants to put me back on earth as to what I was talking about, do let me know. But I think it was mostly the compounding thing, where you guys are either, it's really just these two things. One, don't load up really small accounts and start degenning them, because when you take a loss, it's impossible to make it back because you don't have enough margin to open the same position size. So, summary, deposit more money, trade less size. Will make you all better traders. Number two, if you're struggling to actually keep accounts, I know a lot of you guys have come to me with this, don't keep an account. Just trade a fixed amount every time. Risk $50 a trade. Risk $100 a trade. Don't keep it in like an account that you're changing the trade size every time. Just keep it fixed, and you probably will do better if you're having this problem across the board. I don't think most of you guys necessarily have an analysis problem. Like, we're all going to be wrong at some point. I looked at all the charts you guys sent me, like Dick Vengeance, that AVAX chart. It was a good chart. It did break out from the wedge. Sometimes you just get fucked, right? At the end of the day, you just get fucked sometimes. That thing just rugged us. It rugged us really hard. And that's going to happen. That is absolutely going to happen. But we're also going to have days, and I think you're kind of a bad example because you joined pretty late. But we're gonna have days as well where we call the bottom, right? We buy spot at 60K or buy Solana at like 147. You're gonna have both ways. The problem is, right, if we buy Solana at like 148, right, and the price is now 171, how did we lose all that profit from 171 to 165, right? It's simple stuff like that. When you ask the question logically, it makes sense at the end of the day, but it's just really avoidable. And my general advice with that would just be, don't keep an account. Trade fixed size. I would also say the challenge account is going to definitely help. And I've talked to Sweat a bit about our general format as well. I think this partially is our fault. Is at times the analysis was a bit too vague and we gave you guys FOMO. I would think that's a fair assessment. But honestly, every server kind of had this where everybody just bought the top because this was just one of the times. Honestly, we were all just wrong. Like, at the end of the day, I was bullish. I can't even be mad. I was buying the top too. So I think with the Psy/other coins, we're going to try to be more clear as to where to buy. I know, like, if Sweat just posts, buy Psy is good. It doesn't really give you guys much to go off of. So I'll clean up the format. What makes choosing to get spot versus future? Very easy. If I have no idea where to place a stop loss, I'm buying spot. That's the rule. If I think something is bullish and I don't know where to put a stop, I'm just going to buy it with spot. That's honestly it. Or, Jotram, if I'm going to use way more money than I would on a leverage trade. Like, I'm not going to take a $20,000 leverage trade, but I might buy $20,000 of Bitcoin, right? Like, that would just make more sense. You just pay the fees on the leverage versus spot is free. So you do kind of save money if you can avoid using leverage. I guess that would be one reason. But for the most part, if The reason why leverage is good is that you can have the capital available to be used for something else, because you're using less of it. So unless you have something else that you're dying to do, I don't think it really matters. Generally, though, I'm gonna go give you an example of where I would. Like, let's go look at Sweat's channel, right? Out of curiosity, most of these I would say are leverage, but this is Long, right? Okay, look at his fucking target, and I don't mean this like in an offensive way. His target is $1.7, right? It's 5 times above where the price is. This is not going to get filled tomorrow, okay? Even if the thing does put in a God candle, it's not going to put in a 5x God candle. Most of these trades that he's posting, I feel like he should just fucking stop putting these retarded targets because they're retarded. They're not retarded. They're just swing targets. Don't use leverage on these because you're just going to make your stop way too tight and get wrecked. If you guys see targets that are like 50%, 20%, 50, whatever, just use spot or use low leverage. There's just no point. If he's already aiming for fucking 60%, you don't need to make it 60% times 100x leverage. There's just no point. At the end of the day, guys, the wider the target is, the wider the stop has to be to some degree. And there's just no point of forcing it. Like, there just really isn't. And again, part of it is formatting. Like, I'm reading this, and I'm like, okay, I could easily see why I'd get a bit confused. But honestly, he put a stop loss on these. Like, at the end of the day, they just got hit. So it is kind of just a risk problem. I think I did talk to him in general about making less just bull posting, right? We're going to try to do less stuff where we just influence your bias and try to give you more clean levels. So I've been trying to do that a bit more in my own posts, but it kind of became a shit show the last couple days because I basically was a monkey and longed the top, short at the bottom, and did everything else in between there as well. So not really much to talk about there. Yeah, like, whatever, who cares? I just suck. But I will try to make the format organized. I do think it's been better though. Like, I think the charts have been easier to read. I think Sweat's charts have also been easier to read. Maybe like a thumbs up if you guys have found the format to be okay would be good, or some sort of feedback on that. Because I did try to make the Discord quite a bit more organized, as I'm sure you guys are familiar with. But overall, I want you guys to basically just all start fresh. Delete the Blowfin, like, don't delete it, but don't look at your P&L history, right? It doesn't matter. Don't focus on making back money you don't have anymore. You're just going to lose more money because you're pressured to make back that initial money. It doesn't work. If you go with the mindset of I have to make back the losses, you'll never make anything back. Start fresh. You haven't lost shit. I'm going to pick on you, Dick Vengeance. I know you've had a very rough experience in crypto, so this is going to be very hard for you specifically. And I don't blame you. And I know I'm calling you out, but this applies to anybody. Just try it. I know it's hard. I know it's not an easy thing to just say and versus actually do. But just try to start fresh. And I would say, do the thing I'm saying. Just pick an amount you're going to risk on every trade and just do that. Don't worry about the overall account or how much money you're up or down. Just try to bet a set amount every time for a week. Do it consistently and see your result. It will be better than you think. I promise. It will. And once you get that part down, then you can start to focus on the risk building aspect. You know, the compounding, the account sizing, all of that stuff can be learned later. It's not actually the end of the world. I think the bigger thing really is just focusing on not blowing up at the start. Because again, this is the kind of market I want you guys to make money. You know, the copy trade is doing great. We're still up around 17%. And that should be a great example to you guys, is I'm not perfect either. I take losing trades all the time. As I'm sure you guys have watched me do. I lose quite frequently. The copy trade, we were up a total of 21%, and now we're up 17 or 18%. So I gave back like 4% or maybe 3.5% or so. But that's one trade. I didn't lose the entire week's worth of profits over one trade. And that's the big thing, is I just kept the progress from last week. I didn't do anything crazy. I just didn't blow up. So, you know, there'll be a better trade next week. We need to go make the 4% back and then make something else back as well. I'm going to take a minute here for kind of questions about the concept. Really anything I've talked about so far. I know we're not really a big question server, but always like to ask and just, you know, see how we're doing with that stuff. Also, I know this event time was kind of a poor. I know you guys do not usually come out on nighttime, but I had school all day and I wanted to record it, so I didn't really care. But usually I'll do stuff during the day when we have like the usual 30 or 40 of you guys. So that's all fine. That doesn't bother me. Also, Kathy, welcome to the server. Haven't seen you around much, but cool to have you. Can pull up a chart as well for a minute. Not really much point, but I did take, I might as well. We're already here and no one's talking, so I can talk to myself a bit longer. That's all good. I do like talking to myself. Moment. If only I could figure out how to use the computer. I'm quite poor at this. Discord. Oh, 'cause I'm in full screen. Okay, that's actually pretty cool. Okay. So if I do this...
So
Oh, sorry.
let me ask you this. How much do you believe in prop risk versus actual money risk?
What do you mean by prop risk versus actual money risk?
So prop firm, you get a set amount of capital, and then you spend money. That's technically a risk
Oh, I
on
did
that prop,
this.
right?
I did the prop firm thing. I have here. I would tell you. So I did this one. I have like a link to it actually. Do I have a link to it still? Oh, I do. Prop firm challenge. So I did actually do one of these challenges. I did whatever. Honestly, I hated it. I think it's stupid. You have no flexibility over your own capital. The rules are arbitrary as fuck. And I'm better off using my own money. Because if you have 20K and you can only risk 3%, right? Sure, it teaches me good risk management, but I'd rather just use my own $500, right? Or I could pay, a crazy amount and try to earn the giant account, but I could still only risk like $2,000 to $3,000.
Well, you were talking about managing your risk, and that's probably the best way to do it. Yeah, you can't make crazy gains, but if you want to be disciplined, that would be the way.
Nobody here will pass. I'll be
You
blunt.
don't think so?
No. No chance. No offense, guys. I love you. But you're not passing the prop firm. If you can't risk manage your own account, you're not going to pass the prop firm at the end of the day. And that's kind of why I want to do this new challenge account series. I've done it before, but this is just where I'm just going to post an actual trade account balance and then show the trades. By the way, for context, Nick, it's not that I want them to be risking 1% to trade or 2% to trade like actual like professional traders or whatever. Most people are here for fun, or they're like semi-casual. Some are here to get pretty good at trading, but I would say most are just here to make casual money. They're not looking to become experts, so they can risk 10% here. That's fine. It's just about making money over time. I think I don't want to see the scenario where they turn $100 into $1,000 and then zero it the next week. You know what I mean?
Yeah, I totally get that. That doesn't make any sense. If you make a 10x, you take that money.
Exactly. I think the prop firm style is perfect. Like, you're right. It is the most textbook way you would manage risk. But I also think for most people, if you have $100, it's not fun, right? Like, you're gonna, trade $3 on $100. Most people aren't gonna do that. And that's fine at the end of the day. I think people should risk whatever they're comfortable with. It just comes down to, again, if you want to risk the $20, that's fine. Just put in the extra capital so you have more margin. That's really my only suggestion with that. I think in general, so Nick, for context, most people in the server, I would say, are not really looking to become expert traders by any stretch. Most of them use the bot or the copy trade, and then a good bunch of them trade on their own. I would say most of the guys who trade on their own aren't even in this call, which is fine. So this is probably not going to the right audience, at least yet. But I just want to really stop the trend of turning good weeks into sad weeks, basically. That's about it. Overall, I'm pretty happy with how everything has been going. I think most people are having success, but cannot speak for everybody. In terms of the actual market, guys, not too much to talk about. I took some spy calls around here. I put them in the chat. I got lucky. I bought them tick this apparently. I sold like half of them. I actually think this sends tomorrow, but I have no idea. It just looks good. Kind of a nice level here. It's honestly the same thing across the board. Like if we look at Bitcoin, it pretty much does the same thing. So runs the same wick. This kind of sucked because I kind of figured if we traded below here, we would just take this guy out. So I wanted to buy here, but instead they just kind of fucked me. It kind of just stopped it all around here. It's sort of a random, not really random, but kind of shit level to stop the nuke at. So wasn't a huge fan of that. I also kind of figured we'd get there because it's this wick over here. And if we go look at something like ETH, I mean, we've just effectively nuked straight through all that and, back inside the range now or whatever. So overall, market's not, I would say, that complicated of a spot. do hope this was helpful. I'm definitely going to repost the recording on YouTube. I'd say most content we do is a little bit more structured than this, but just wanted to keep it casual, honestly. And I'll probably do this live again tomorrow in the daytime for the guys who do usually trade, because this definitely is not most of you, but that is all good. If there's no questions or anything, I think we can wrap this up. So yeah, any last minute thoughts, guys, or things you want to ask? Market, trading, bots, whatever you want. Enro, the walls have eyes, and they're still listening to you, just so you know.
So yesterday yesterday we were talking about that AVAX chart, and you mentioned it this morning. I mean, you mentioned it a little earlier. So where I feel like I went wrong with that is, I was trying to trade inside that wedge when really I should have waited till it broke it, either one way or the other.
You did nothing wrong, in my opinion. You bought it where? Here?
Yeah.
Here? So, okay. You're buying it at support. There's nothing wrong with this.
I was guessing that it was going to bounce off.
The sell is here.
Yeah.
It's just here. I think the mistake is just not having a stop loss, right? That's all it is. It's if you take the loss and just sell here, right? It's a small loss. You live to fight another day. It's only when you hold it all the way down here it becomes a much bigger problem, which is what I did too. So I'm not even criticizing you. I did the exact same thing. But
no, I actually cut it, man. I had a stop loss at that wedge, just a little bit below it.
That's amazing.
So I actually did cut.
So yeah, again, you did literally everything right. You had a level. Right?
I've been doing okay. I've been doing okay with cutting things.
Well, that's half the battle. I mean, not holding things to zero really is half the battle. Because at the end of the day, I don't see anything.
Pretty much.
Oh, oopsies. Yeah,
I pretty much lost 20% today off of little 5% bets, and then I just made it back 20 minutes ago.
Okay. So let's break this down. How 5% bets are not that little, right? So if we start taking 5, 10 of them, that's already 2 to 3, that's already 10, 15%. Now, what I would say is, are you trading with a small amount of capital that's kind of boring? Is there a reason you're risking so much?
Yeah. I mean, I usually do 5% port with high leverage.
Fuck the port, fuck the leverage. What do you want to make on any trade? Give me a profit number that you're happy with.
I mean, if I made, right now I'm only playing with a small amount of money, like $200. So
nope. Take it out of the equation. Ignore it. Just work with me. Okay. Hypothetical world here. Yeah. You're just trading. What is a good amount? Don't even pretend you have a trading account. Just in general, how much are you okay losing or making on any trade? If you could pick
$20.
Okay,
I think, considering what the bag I got.
Sure.
A bigger bag, I would probably do about that same amount.
Excellent.
Just percentage wise.
Use your net worth for this equation, basically. Don't use your trading portfolio. Use whatever you think is a good margin. If in real life I would be sad losing $20, I should not bet more than $20, basically. That's exactly right. So with that, your trading account size doesn't matter. You want to risk $20. So what I would do when I'm thinking of these trades is, you said you're doing 5% port, 5% margin, right? Stuff like that. Stop thinking like this.
Yep.
Let me tell you why. I said it in my posts many times, but think in coins. Stop pricing things in dollars. Think in coins. It's so much easier. Let me explain. If I buy this here, so I'm you, okay? I buy at 27.5. I want to get this nice and easy. Okay, so I buy here, right? I put my stop loss, like you said, below the range. So let's say 27, right? Does this sound about right so far? So 50 cents for my entry. Instead of thinking about, I'm going to use X leverage, X margin, X percent port, don't do any of it. Not even a little bit. Seriously, not even one. Pick an arbitrary amount of leverage. I would say 5 to 10x. It doesn't matter. Something low. Don't think about it. You should only think in terms of number of coins. Okay, let's just do it like this. If the price is 27.5, right, and I buy 20 avalanche here. Okay. And then I sell my 20 avalanche down here, right? Let's just do the math. If 20 avalanche drops 50 cents, how much do I lose? Let's find out. Times 27.5 equals. This is $540. Ah, sorry. Can you guys still see my screen? Lost it.
Yep.
Cool. This is $540. Now, I did the same calculation down here, right? Times 27. 27 times 20. Equals 500 and... Ah! Sorry. Equals 520. So, do you guys kind of see like how this works? And like why this would be a really easy way to think about it. For every 50 cents AVAX drops, if I have one AVAX, I lose 50 cents. If I have 10 AVAX and AVAX drops 50 cents, I lose $5. Right? Does this kind of make sense, Dick? Wow, that's a weird way to have to call you. But is this not like easier to think of?
You can call me V.
Yes, that makes more sense. But like, is this not like an easier way to think about it? Because if you just think about like this, you just do 50 cents times the number of coins, and that's how much you're risking, right? So 0.5 times 20 equals $5. So if I use 20 coins, I risk $5. If I use 40 coins, I risk $10. And if you think like this, do you see how leverage, margin all becomes irrelevant? Like it's all meaningless now? Because
Yes.
5 coins or 10 or 20 coins or 40 coins at whatever leverage you choose is still going to be the same thing. And it's going to be much less confusing to think about. So whenever you're going into a trade, instead of worrying about how much is in the account, I would just think about like this. You know, if I want to buy here and risk X amount, how much do I have to put, etc., etc. And that's going to really simplify the way you trade. I think. Obviously, you know, going to be different for everybody, I would say, but for the vast majority of people, this is going to be a game changer and honestly make a huge difference in your trading. So try doing this
I'll
for a
give it a
week,
try, man.
at the very least. I think everybody should. And I'm glad we got to do this example. Cool. So I do got to wrap this up as I have to finish up some work. If there's no other questions, thank you guys all for coming out. And yeah, I will catch you all in the next one.
Appreciate your time, man.